Hi, ladies and gents. Welcome to this podcast. I'm going to be looking at the retirements of partners and partnerships. Obviously, this is quite a common thing that happens. People either decide to retire or go off and do something different. I'm going to look at quite a simple example of a partnership. So in this one, we've got Aisha, Shaka and Lana in a partnership, and they've been sharing profits on a ratio of 2 to 2 to 1. After the retirement of Aisha, then they'll be sharing the profits on a ratio of 3 to 2. Date of retirement, just 1st of Jan 2020. Goodwill is going to be valued at 50,000, but they're not going to keep it in the books after the retirement of the partner. Property has been revalued upwards by 100,000. Aisha is going to take a car as part of the money that the business is going to owe her, and that car has a net book value in the books of 5,000, but the agreed valuation on the 1st of January is only 4,000. So there's been a loss in the value of the car, and Aisha is going to take 30,000 from the bank, and she's agreed to leave any remaining money in the partnership for a period of 2 years. Now, in this case, we've got both balances on the current account, and there's also some balances on every partner's capital accounts. They're all credit balances, so they're all owed money in theory by the business. So the first thing we're going to do is we're going to write off Aisha's current account. Now, you don't have to do it this way. I'll show you another way of doing this, but it's quite a common way, and certainly those will be doing in an Excel exam. It's the way they've always done the mark schemes, that the current account gets transferred into the capital account, so you just get one final figure for the money owed by the business to a partner. So we need to debit Aisha's current account and put a quick credit entry into the capital account to increase the amount of money owed to Aisha. We'll then deal with the goodwill, and I'm not going to do the goodwill and the revaluations through the revaluation account because there aren't very many entries to make anyway. I'm just going to put those straight into the capital account. Okay, so when we put the goodwill in, we need to make a debit entry of a total of 50,000 in the goodwill account, and it's going to be done on the old profit share ratio of 2 to 2 to 1. So I divide 50,000 by 5, and that gives me 10,000 as one profit share, and for Aisha and Shaka, that's 20,000. And because I've got a debit entry in the goodwill account, I need to put a credit entry into each of the partners' capital accounts. Just make that clear that these are capital accounts. Okay, next come on to the property. The property is revalued by 100,000. Because it says by, not to, that means the increase is 100,000. That belongs to the partners on the old profit share ratio because the property will have increased in value while all the partners have been members of the partnership. And again, I need to divide that by 5 because the profit share ratio is 2 to 2 to 1. And that gives me one profit share of 20,000. And because Aisha and Shaka get 2 profit shares, they're going to get 40,000 each. That covers off all the credit entries for what's owed to the partners. Next, have a quick look at the car. Well, the car's decreased in value by 1,000 as part of the valuation. And again, that 1,000, that loss in the value of the car, belongs to all 3 partners. So we need to put a debit entry in because we would effectively credit the motor vehicle account, and that gives Aisha's losing 400, Shaka £400, and Lana £200. Right, goodwill. When Aisha has left the partnership, she no longer owns any of the goodwill. So the goodwill is going to be split between Shaka and Lana, and that's going to be using the new profit share ratio. So we need to divide by 5 again, but this time we give Shaka 3 lots of 20,000 and Lana 2 lots of 20,000. So put the credit entry into the goodwill account, and we need to debit those 2 partners in their capital accounts to reduce the amount of money it shows that's owed to those 2 partners. And now we get on to what we're going to do with Aisha, because that pretty much finishes off what we need to do with Shaka and Lana. We can work out what their balances carried forward are going to be. And there won't be a balance carried forward anyway for Aisha because she's no longer going to be part of the business. So Shaka will have a balance carried forward of 49,600 and Lana of 19,800. Don't forget to put your BDs in an exam because you can lose easy marks if you forget to do that. And now we'll have a look at what we're going to do with the motor vehicle. Well, she's taking that motor vehicle out as part of the 85,600 that the business owes to her. And I got that figure by subtracting 400 from the 86,000 that was on the credit side. So that will go in as a debit entry because we would credit the motor vehicle account or the disposal account for 4,000. We also know that she's going to take 30,000 out from the bank. So we credit the bank and we need to debit Aisha because she will no longer be owed that money. And the remaining money, well, I need to do 34,400 subtracted from 36,000. And that means that the remaining money is £51,600. And that would become a loan. And because it's for 2 years, it will be a non-current liability for the existing partnership. All right, very, very quickly, let's have a quick look at the other alternative way that we could do this. Okay, what we could have done instead of taking the current account balance down to the capital account, we could just have paid that out through the bank. So that would then just be a debit in the current account of 6,000 and a credit in the bank account if I was showing that. The goodwill accounts, well, they don't need to change at all. The goodwill would still be treated in the same way. The amount of money now that would go out from the bank in the capital account, that would reduce from 30,000 to 24,000 because 6,000 of that 30,000 has been taken out of the current account, and what wouldn't change is the value of the bank loan because overall she's still only taking out the same amount of money, and overall she's still owed the 6,000 plus the 80,000 that's in the capital account for Aisha without the 6,000 being transferred in. I'll put you some homework question, a quick homework question to do on there, but that pretty much